In 2026, a fitness race about running laps and pushing sledge did something most trendy sports never achieve. It attracted Capitone, the private equity firm backed by LVMH, the group behind Louis Vuitton, Dior, Sephora, and some of the most powerful customer brands on the planet. We are talking about a company that started in Hamburg warehouse and grew into global sport running 121 races a year across 34 countries, serving about 1.5 million athletes and projected roughly 270 million in revenue. That kind of growth curve is exactly what sophisticated capital looks for. So, the real question for us is, what did investors see in Hyrox scaling and monetization playbook? And how can you borrow the same idea for your business? I'm Karen, and this is the part 2 of the Hyrox breakdown. We are going beyond the foundation. Tip 4. Drive your CAC as close to zero as possible. Let's talk about customer acquisition cost. See, for most business, you need to pull new customer in, be it via ads, sales teams, agency, etc., etc. Hyrox did something different. They add hundreds of thousands of new athletes in a single season, reaching around 780,000 participants by 2025, while spending essentially nothing on paid ad. How? Every finishers get a personalized bib, a chip time result, professional race photo that you pay for, and humans do what humans do. They post it on Instagram, TikTok, 小红书, LinkedIn. I did it myself as well. Every finish line become a free marketing. Hyrox deliberately turned athletes into influencers and events into content factories. Takeaway for you: instead of only looking at cost, be specific and clear about your customer acquisition cost. How much do you spend to acquire one customer versus how much profit you can get from them over a lifetime? From there, you know where you should be focusing on: enhancing efficiency of acquisition or increase the share of pocket of each customer that you spend so much to acquire. Tip 5. Scale smart, own what's matter, outsource what doesn't. So, how does one company manage to run over 100 events in a year across 34 countries? They don't try to do everything themselves, but they never let go of their true assets. Hyrox scaling strategy has 3 pillars. First, radical standardization. So every race globally, same 8 stations, same distance, same layout logic. They built a fleet of about 10 identical equipment truck set up that can deploy a full event in roughly 36 to 48 hours. Second, hub and spoke ownership. So in major markets, US, UK, Australia, China, Hyrox runs events via regional entities like Hyrox APAC and Hyrox China, with local MDs such as Gary Wan. These are company-owned spoke of the global. Brands and standards are controlled centrally. There are also selective licensing. In some markets like Spain, Portugal, they license to local operator. The license bear the local risk and operations. Hyrox takes the cut. Here is the key: Hyrox never outsource the brand and the data. Brand, without dispute, this is the greatest asset Hyrox has. Data, every athlete's time, race, divisions, all live in Hyrox central database. Hyrox is deliberately under-commercialized right now, choosing not to fully monetize their data and media potential yet. So take away for you. Ask, what's my non-negotiable asset? Is it the brand? Is it the data, IP? Protect that. Own it. Everything else, you can partner, license, or outsource to scale fast. Tip 6. Think in revenue streams, not just revenue. So most small business have one way of making money, and when growth stall, the reflex is to push harder on that one lever: more ads, more discount, more sales call. Hyrox look at the same business and ask different questions. How many revenue levers can we build around this? Here's a simplified breakdown. Roughly 65% of the revenue is from athlete entry fee and spectator ticket, gym affiliation, training clubs, and paying around $130 per month across thousands of gyms. That's recurring B2B subscription revenue, sponsorship, and brand deals. Puma, Red Bull, plus regional title partners like Cigna Healthcare, AirAsia in APAC. Sponsorship is only about 15% of the revenue, but that's extremely high margin. Of course, you still have merchandise, and they are already signaling future upcoming revenue stream like live streaming, media rights, a fully digital training platform, and potential Olympic aligned pathway by 2032. Most small business that I have worked with are not flexible at all when it comes to revenue model. If it's like a B2C brand, the entire obsession is how do we get more retail customer? But almost no one asks, is there a B2B angle? If it's a B2B, the mindset is to sell more enterprise contract, but rarely think about, could I build a platform enterprise client can plug into where they cross-sell and I get a split of the revenue? Hyrox is doing exactly that kind of lateral thinking. Same event, multiple business models sitting on top of it. So, takeaway for you, don't just think more revenue, think more revenue stream. That's how you move from BC business to scalable business. Tip 7, crack the unit economies first, then multiply. Hyrox can scale because they have cracked the per event equation. Here's rough maths. An event breaks even at around 1,500 athletes. The average event now hosts about 7,800 athletes. That implies 80% gross margin per event. Their fixed costs are mainly fleets of standardized equipment, trucks, headquarter staff, head platform for registration. Variable costs per event would be venue rental, local logistics. Every new event is plugging into an existing template. Critically, Hyrox has been cash flow positive. So let's recap the 7th strategy. Hyrox used to go from 650 people to a projected 270 million global sport. Validate the problem first, pilot before you commit, engineer your funnel, drive your CAC to zero, scale smart, own brand and data, think in revenue stream, crack unit economy first. You don't need 1.5 million customers to apply this. You just need courage to design your growth instead of hoping it happens. Share this video with a founder friends and hit subscribe because every week we break down the business model behind the brand you know so you can build the business you want. I'm Karen, thanks for watching and keep moving.